Welcome, good morning. This is our second lesson on public finance. In our previous lesson, we learned what is public finance and sources of public finance. Learning outcomes of today's lessons include, by the end of the lesson, the learner should be able to state what is government expenditure, explain categories of government expenditure, outline principles of government expenditure, explain the meaning of tax, and lastly, explain reasons for taxation. What is government expenditure? It refers to spending by the government or finances it has raised. And we have three categories of government expenditure. Number one, we have recurrent expenditure, and this is government spending which takes place on regular basis. For example, salaries to civil servants, provisions of drugs to hospitals, fueling of government vehicles, among others. The second type of expenditure is called development expenditure. The government expenditure that goes into financing projects, for example, construction of railway lines, airports, etc. And lastly, we have transfer payment. It is money paid to people who have not produced anything in order to earn the money. For example, bursaries paid to students or relief food. Principles of public expenditure. They include 1. Sanctions. Government expenditure must be approved or sanctioned by the relevant authority, and in this case, it's Parliament. It should have maximum social benefit. That is, the majority of people to reap maximum benefit from it. There should be flexibility in order to meet economic situations. Economy. It should be incurred in the most convenient or economical way by avoiding any possible waste. Proper financial management. It should be well managed. What is tax? Tax is compulsory payment by either individual or organization to the government. And taxation is the process which government raises its revenue by collecting taxes. Why should we pay tax? Reasons for taxation: raising revenue for government, discouraging the consumption of a certain product, discouraging importation of a certain product, and reducing inequality in income distribution. Also, taxation is used to control inflation. It is used to influence location of business. For example, we have a government policy of delocalization of factories or farms in rural areas. Collecting of unfavorable balance of payment, that is the size of commercial and subsistence sector. Principles of taxation. A good tax system has some characteristics which are called principles or canons of taxation, and they include equitable. Tax burden should be distributed fairly, both horizontally or vertically. Certain. It should be clear in terms of time, amount, and manner in which it should be paid. It should be convenient to both the contributor and the collector. Economical. The cost of collecting and administering should be lower than the revenue to be collected. Flexible. To adequate to changing circumstances, for example, price levels. Ability to pay. The amount charged as tax should not be too high to the taxpayer. Diversified. It should be diversified to meet revenue requirements of the country and to be in line with equity. Simplicity, it should be simple to understand by each taxpayer. Now, let us look at the classification of taxes. But we have two terms here, impact of tax and incident of tax. Impact of tax is the burden of the tax to the initial person. An incidence of tax, tax is passed partially or whole to someone else. Taxes are classified according to the structure. It includes the relationship between the amount paid as tax and income of the taxpayer, which includes regressive tax. It takes higher proportion of income earners as compared to high income earners paying same tax whether you are rich or poor. Proportional tax. All taxpayers pay a fixed percentage of their income, for example 30%. If income is 4,000 for the first person and 9,000 for the second person respectively, they would pay tax as follows. Whoever is earning 4,000 will pay 30% of 4,000, which is 1,200. The next person who is earning 9,000 will pay a tax of 2,700. That is 30% of 9,000. Progressive tax. This is the type of tax where the amount paid increases proportionately with increase in income. For example, 20% of tax for those who are earning 5,000 and 25,000% of tax for those who are earning 8,000. Disadvantages of progressive tax. It may discourage people from working. Investors are discouraged from venturing into risky but profitable businesses. It assumes that people earning the same have the same needs, which might not be true. It may reduce output. And lastly, it may discourage vertical mobility of labor. Thank you.